Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind, each and every trade you take has a risk of losing, just as you have the potential also for winning. So you want to manage your risk in a way that makes sense for you because no one trade is guaranteed to profit. I think we all understand that. Also keep in mind that what we cover is not meant to be financial advisement, but it's coming from an educational perspective. We will go over some unique tools that are found on our WebTrader platform and our AvaTrade Go mobile app, which can trade right on top of your MetaTrader accounts. We'll go over some unique features, not just for technical analysis, but also for risk management, some features that can help you out in that regard as well. Okay, so real quick for beginners, before we get on the live charts, to look for some opportunities that you might be interested in. What is technical analysis? Put simply, it is looking at the historical movements of the prices, looking for patterns or movements that might lend some predictability to future movements. Now, obviously, past movements are no guarantee of predicting future movements, but we do find some success with different strategies when we look at price levels and movements and patterns in the past and try and get an idea of what that might mean for future movements. And so that's the idea, whether you're looking at support levels, resistance levels, trend lines, breakthrough moves, etc., or making use of indicators on top of it that also analyze those same movements and give you the indicator's view of whether something's overbought or oversold, etc. It's the same idea with the manual methods that we tend to lean on. In the webinar, we're looking at the price levels and reading exactly what the indicators read. I tend to lean on the manual methods of technical analysis in the webinars because that is how you learn what's going on in terms of the price movements and the strategies. And later you can add indicators to help you out as well to see if they agree with your own technical analysis as you go along. Some just rely on the indicators, that's okay, but obviously you're not learning much in terms of reading technical analysis patterns if you're just relying on the indicators. So for the webinar purposes, we tend to lean on the manual methods of technical analysis. If you have any questions as we go along, you want to give any input that's pertinent to what we're talking about, please feel free to do so in the chat box. I'm happy to share what you might have to say. This is our WebTrader platform, by the way. You get to it from here. You log in from the upper right corner to get to our WebTrader platform. In the lower right corner, you see down here, I have our mobile app going. We'll take a look at that as well and some of the features that can help you with your technical analysis as you go into looking for potential moves. Now, I always like to get an idea of the fundamental news as well before doing technical analysis. Even though we're focused on technical analysis in this webinar, it only takes 5 or 10 minutes to get an idea of what's going on with the sentiment fundamentally. And so here's a headline from Reuters: morning bid, more than 4 rate rises in 2022. That's with a question mark. The Feds had their meeting and their press conference and their rate decision yesterday in the US, and it's creating a lot of fear and anxiety with investors of when will the US and how quickly will the US and in what magnitude will the US raise interest rates to try and stave off some of this hyperinflation that's been going on, not just in the US, but around the world, really. And so too much stimulus and too low of interest rates for too long has helped lead, we believe, to this hyperinflation. So the next logical conclusion is if you want to get rid of the hyperinflation, even though it was helping the economy, it's gotten so bad that these stimulus measures have now gotten so much inflation that that's actually hurting the economy. So cutting back on the stimulus measures, meaning raising the interest rates back up, cutting back on bond buying programs, etc. That's what's expected to come maybe this year. And from what Jerome Powell had to say yesterday, that's him, the guy in the picture here, from what he had to say yesterday, it sounds like multiple rate increases are coming this year potentially in the US, and that the first one could be as soon as March, and that more than 4 rate rises might actually be on the table from what he said. Okay, some of his comments, and his comments were that there's basically quite a bit of room for them to do some things in that regard with the way the economy sits right now. I think he quoted maybe the jobs numbers looking solid, meaning the unemployment rate is really low, and saying that that gives a lot of room for making some moves to try and stave off inflation. So the investors got shook a little bit by those comments, and the market dropped some more. We've seen some rebounds from these drops as well. So it says stocks drop. Here's another headline from another source. Stocks drop after Fed Powell's hawkish stance. Hawkish means like a stance that's going to be aggressive. And you know, saying could be 4 or even more rate increases this year is being viewed by many as hawkish, as being aggressive. And again, we see down here, the futures are red. Yesterday finished in the red, and the futures are red now. So the futures are these top 2 right here. They're ticking now. US markets closed yesterday at these prices. Those are the non-futures market, closed in the red, and now we're starting in the red already today. We see volatility is kind of down a bit. The VIX volatility index, it's not up 10%, 15%, 20% like it was earlier in the week. So maybe that's a good thing for the markets, that volatility and fear is not flying up, at least not right now. But the US dollar is strengthening some more. We see that up over 0.5% on the dollar index. And usually when people are afraid of risky investments and they're selling stocks and things like that, they go to what they view as safer investments. And sometimes they view currencies of certain countries as safe, like the Japanese yen is a traditional safe haven currency. So that could maybe have some strengthening when there's fear, when people are leaving riskier assets. And also the US dollar many times can strengthen when stocks are selling off. And we're seeing that's the case right now. Indices are dropping, US dollar is strengthening. Even though fear has kind of flattened off, look at where it flattened off. You know, the VIX index, they say if it's above 30, shows that there's a really high amount of fear. So the change in fear is it's dropped down a hair today, it's dropped down some, but overall the VIX volatility index, otherwise known as the fear index, is very high. It's above 30. You know, in typical times when there's not a lot of fear on the market, that volatility index reading is well under 20. So even though the increase in fear is not there today, the overall fear level is shown as being above 30 on this reading, which if you read what that means, most you know, of those folks who analyze these numbers will probably lean towards telling you if the VIX is above 30, that's showing you that there's some significant fear still on the markets. So keep that in mind. Here's another one from Reuters. Investors look to prune portfolio risk. That's kind of what we're talking about. When there's fear, investors tend to want to get out of the riskier instruments. That's why maybe we've seen such a drop in cryptocurrencies as well, which are deemed, you know, high risk, high reward many times. And right now, if the fear is up, then the investors in large part try and leave riskier instruments when there's a lot of fear many times. And so that's what this headline is telling you. And so the stock market, individual stocks and indices, those are considered maybe higher risk by many investors, as well as cryptocurrency. So that's what you saw sell off this week. Starting on Monday, Tuesday, it's kind of bounced back a bit today, and even a little bit yesterday, okay, after the huge drops. So everyone's trying to take in this whole Fed statement and potential rate increases, and then on top of it, we've got this whole thing with US, China, Ukraine going on, okay? Will Russia invade Ukraine? what will the U.S. and the allies that are part of the NATO agreement do? Ukraine is technically not part of the NATO agreement. They would like to be, probably. Russia doesn't want them to be. I think one of their demands is an assurance that the NATO allies will not allow Ukraine to join, because Russia views that then as a risk, as a neighboring country to them, being a member of NATO, if that were to occur. So there's a lot of back and forth dialogue to try and avoid any actual war here. The U.S. sent a letter, I guess, from the president yesterday to the Russian delegates, and so it's back and forth. And now China says they're trying to confer and urge de-escalation as well, although there's fears China might go after Taiwan. So depending on what happens with this whole Ukraine situation. So to say that anything is settled here would probably not be true. There's a lot of anxiety about what's going on here. So this is just adding to the fear on the markets. Okay. What effect has this had on any specific instruments? It seems oil has been maybe more hawkish, price going up on oil, with fears that besides inflation driving the price of oil up, there's also fears that maybe there could be supply disruptions in the energy sector because of any type of conflict that could involve Russia and the Ukraine, and who knows who else could get involved. And so there's already threats about the Nord Stream pipeline and all of these back and forths about what might happen with oil supply as well. So certainly it's affecting instruments, this fear about potential war as well. That's on top of this whole rate thing that's going on. So it was like the perfect storm this week, with fear fundamentally driving the riskier instruments as deemed by investors to kind of plunge. Okay. Now, that brings us then to our technical analysis. Now that we understand the fundamental situation a bit, then we get into our technical analysis. And what we can do is first take a look at our app, which, by the way, if you want to download the app onto your mobile device, you go to trading platforms and then go to AvaTrade Go right here. Okay, that takes you to our links that take you to your app store, and you can just keyword search in your app store AvaTrade Go, you'll find it, or you can follow the links and download the app. And the app has a lot of nice features that also you find on our WebTrader. So if we go to a full screen view here, we can take a quick look at the app and how it functions and how it can help you out with your technical analysis, your risk management, etc. So if you tap this tab down here, what we'll see are some advanced features besides doing your own technical analysis and looking at the charts, which is very simple to do on the app. You can look at some advanced features that come complements of Trading Central. And so Market Buzz, we looked at that Tuesday with our fundamental analysis webinar. The Market Buzz brings up articles on whatever stocks you want to choose, brings up the most recent articles from all around the web, condensed for you, time-stamped, the most recent fundamental news coming in about Apple, Google, whatever stock you choose. You'll see what's coming in, like right now, coming in off the web from all kinds of sources. So it really makes your fundamental analysis of the stocks that we offer very, very efficient. So that's a feature that if you didn't catch the last webinar, you could go back. They're recorded and uploaded to our YouTube channel. I'm sure it's there. You could take a look and see how we looked at how the Market Buzz works. For technical analysis, you have free signals coming in here from featured ideas, from analyst views. If we pull up one of those, I tapped on the analyst views. We can take a look at the signals that are coming in. Real quick, I have someone who just typed that the audio stopped. I don't believe that it did, but maybe. If you would, type OK in the chat box if you're still hearing me clearly. I think maybe it's just the one person who lost audio. All right, thank you. I've got enough responses. I'm just typing a little note to say audio is fine. It is just you. Okay, thank you. So these are the signals you can look through. and they're focused on currencies or the currency indexes and cryptocurrencies. So you have those available with these signals coming in all through the day, time-stamped for when they came in, most recent on top. As you scroll down, they're a little bit older, but you know, the older signals are still many times valid, meaning even if a signal was from a few hours ago, it tells you the standards within the signal as to whether it's still valid or not. Long, like this USD Swiss franc, it says long positions above 92.20 with targets at 9,300 and 93.25 in extension. So if you take a look at the chart and it's still above 92.20 and hasn't reached the target prices, then the signal is still valid, as long as you agree that the fundamental news is on your side, okay? So we can go through the signals and say which ones make sense to us. If you say, okay, Euro USD signal saying Euro USD dropping, and you say, well, listen, we saw the dollar index is strengthening. We see that there's still a lot of fear on the markets. And if you feel like, hey, the USD is usually more likely to strengthen if there's fear on the markets and riskier instruments are being sold off, if that's how you feel, especially when Jerome Powell is saying we may raise interest rates 4 times, maybe more this year, maybe as soon as March, start liftoff on rate increases, and you feel like these increased interest rates could drive a stronger US dollar, then if that's the case, then you say, okay, the fundamental news makes sense with this signal. Now let's check out the technical analysis. So then you tap on the signal that you like best based on your understanding of the current fundamental news, and let's look at the technical analysis then. You see the price levels are drawn for you. This is an old support level right here, okay? And so it says preference to go short here, to sell, meaning as long as this has not gone up and broken back above this broken support, you see this move here down broke this support level right here. So because it broke this support level in price where it had hit and gone back up, hit and went back up, it broke below that support. Now they're saying as long as this doesn't go back up and break above this old support, then they're saying it's still a downtrend. And to take profit, they're saying somewhere near these price levels down here. The technical analysis is done for you. These take profit levels, if you look at larger candles than 30-minute, you probably will see these are support levels from 1-day candles or 1-week candles, and that's why they're suggesting maybe taking profit at these price levels. Now, what if we look at it and this has come back up near this line up here, but did not break above it? Then that's an even better entry point, right, than what you see in this image, because they're saying as long as it didn't break above this old support, then it's still, this should act as resistance. And then they're saying the signal is still valid to short this, to sell. But they're also saying the alternate scenario is if it goes above that level, then to buy with your take profits up at these green lines. Okay, so it gives you the preference and an alternate scenario, which is dictated by where is the current price. What is the current technical view of the chart? Is it respecting the resistance and going downward? Then they're saying sell with take profit down here. And obviously it's more opportunistic if it's pulled back up near the resistance but didn't break above it. Then if you believe it will drop from that resistance, it's more opportunistic to sell from up here rather than down here. And it very well might have pulled back up some. So we'll take a look at the Euro USD in a moment. But this is how you read these signals. If you look at it and it's broken above this blue line, well, that's a breakthrough back above the resistance, back above the old support. Then they're saying, okay, maybe something changed fundamentally if that happens. And the alternate scenario at that point then would be to buy. Okay, so that's how you read these signals. Very cool information. Makes your technical analysis more efficient because it's done for you. And then you can interpret the chart how you see fit as well. Okay. Now, what we're looking at here is the features that you have in the app are also on the WebTrader. So I could open an order window here to buy or sell, and you're going to see AvaProtect. You're going to see that the order window calculates your risk to your stop loss for the exposed amount to the stop loss price. You'll see that if you program a take profit, it's calculating your potential profit to the take profit. Okay, those things are calculated for you so that you have a general idea of what am I risking on this move with this trade size, or what's my potential profit even before you open the trade. Okay, and I think maybe it'll be easier to show you that on the WebTrader platform because it has the same features. So let's exit the app for now. I'll just close off the share screen on the app, and let's take a look at the WebTrader then. So if you log in here, you'll be on this platform here. Okay, the WebTrader platform. And so same features as the app, just full screen on your computer instead of on your mobile device. Real quick, I just want to do another check. Type OK if you're still seeing my screen all right and hearing me clearly, because I had one more person saying that they couldn't hear. All right, great. I've got enough responses. Thank you. Looks like we're still up and running fine. Okay, so let's then look at that Euro USD that we saw in the signals. And by the way, you have those same features available here. If you click on the tab, you'll see Trading Central, and you'll see those same options: Market Buzz, Forex featured ideas with the signals, etc. So let's bring up the Euro USD, since we saw that signal that said it was recommending shorting the Euro USD. And since our fundamental analysis helps us understand why that might make sense, then we can take a look and see if we like the entry point still to follow that signal. And what I believe we're seeing is the signal already came to fruition, okay? And it did. So the Euro USD already plunged. The US dollar pulled it down. And so, you know, you see how accurate that particular signal was. Not every signal is going to be accurate, by the way, but those signals typically are not just randomly picked, right? They're picked because of the Trading Central analysts who outline those signals. They're looking just like we did at the fundamentals, at the technical analysis. They saw the broken support level right here. This was the broken support I was showing you. And once it broke the support, and we knew the fundamental news went with the idea that interest rate increases could be coming in the US dollar is strengthening because of that maybe, then it made sense. Okay, the technical analysis shows a broken support, which shows downward momentum, and the fundamentals explain why. So the signal came out, could be 2 hours ago, 3 hours ago, that, hey, it makes sense to short this. And look what happened over the last 3, 4, 5, 6, 8, 10 hours. It's been dropping. Okay, so now you say, okay, well, it's too late then. That signal already occurred. I wish I would have saw it 3 hours ago, whatever the case may be, or maybe you already did. So then we have to analyze it again and say, okay, let's go to 15-minute candles. Let's zoom in. If this rebounds back up, you could have a pending order if you want to short this. I'm not saying you have to want to short this, but if you say, okay, if this gives me a better price and I want to short this, but not from where it is now, maybe, then okay, you could use a pending order. That you know, if it comes back up near this was the old support. It hit and went up. This was support, and then here's the momentum where it broke. Okay, boom, it breaks through. And that very well could have been when Powell was making his comments. Boom, it broke the support. You could put a pending order right up here, that if it comes back up near that price here, that if it gives you the opportunity to sell from just below that broken support, which now you would think would act as resistance maybe. If this does come back up, it might have resistance from the old broken support. That's how support and resistance theory tends to work. Old support that's been broken for whatever reason caused it to break. If that reason still exists, then the old support now becomes resistance, because in this case, the fear about increased interest rates still exists. So unless he comes out and says, never mind, I changed my mind, we're not going to raise interest rates, unless he does that, then that news still exists, which is the reason maybe why this broke. So as long as that news still exists, if this pushes back up, it probably will have trouble breaking this price unless the fundamental news changes, right? So you could put a pending order up here, just hoping that it gives you a lucky spike up to catch a price just below the resistance to sell, if you believe the US dollar should continue to strengthen, right? So you could say execute when price hits. First, you choose sell if that's what you want. Execute when price hits. Sometimes you look and you say, oh, it is at the price I want. So then you can do a market move. We look at it now and it's not at the price you want. Then in that case, you could do a pending order in case it goes to the price you want. So in this case, we might say $1.1253. So maybe we just round that off to $1.1250. Okay, as an entry price. If it gives you that price, then it would open. If I don't eliminate it, there it is, 112.50. Then take profit, you could say, is somewhere, if it entered here as a sell, then the take profit would be somewhere down here, maybe towards where it already reached, right? So you could say 112 even. Certainly if it goes back up here and the news hasn't changed, it has the potential to be able to reach back down in this range without even having to break today's low, okay? So then we can go back here and say, okay, 112 even. And my stop loss then, I can program, if you like to use a stop loss, right? It makes sense that if the reason you're selling is that you think this resistance level will hold, then it makes sense that if you're using a stop loss, that you might put your stop loss just above that resistance. Because if it breaks through the resistance, then your theory is wrong, right? You're selling from this price up here if you believe the resistance will hold. If it breaks through the resistance, then your stop loss being above that would cut the losses short in the event that, hey, maybe the fundamental news changed. Maybe Powell does, maybe a headline hits that says, oh, Powell promises no more than 3 rate increases. You know, if a headline hit like that, it easily could go up and break this resistance and the US dollar could start to weaken, right, on that type of news. So to have a stop loss above that resistance, that if the news changes, which could happen, you can control the amount of exposure to your exit price, okay? So you don't have to use a stop loss, but it would make sense if you do use one to have it somewhere maybe above this resistance level, that if it breaks that resistance, then maybe you think about giving up on the movement. 112, let's say 112.70 is above that resistance level by a decent amount. So with that, oh, I'm sorry. We had take profit down here at 112, and I want to put my stop loss at 112.70. Okay, so my potential profit then in this scenario on this pending sell is possible profit 50, possible loss 20. Yeah, we can look at the FTSE. Henry, no problem. As soon as we're done with the Euro USD, it's good to look at an indice. They're all moving very similarly. So what the FTSE is doing is probably similar to what the US 500 is doing, or the NASDAQ, or many of the major indices around the world. Okay, so we're looking at better than 2 to 1. What is that? 2.5 to 1 potential profit to possible loss if the movement comes up and gives you this price just below the resistance. Okay, and many times there's a bounce back. Many times, so it very easily could come back up and give you a better price to sell from if you're looking to short the Euro USD. Okay, so and I'm not telling you if you want to short the USD you can't do it now. Perhaps it just keeps dropping. Okay, I'm not telling you not to, but this is one strategy with a pending order to try and get a better price, because we saw the fear change today actually shows that fear is dropping a little today, not going up. So the US dollar easily could give back some ground to the euro. Okay, so with no guarantee, obviously. So we're putting a pending order here, better than 2 to 1. It's actually 2.5 to 1 possible profit to loss on our take profit and stop loss exposure here. So now let's say you have a number in mind that you want to risk. Usually that's a good idea, to know how much do I want to risk per trade or on this particular move. And let's pretend I say I want to risk 500. on each trade, if that's what I'm wanting to risk. So then I change the lot size until it shows my possible loss, the amount that I want. So maybe I go to 2 lots and I see, okay, I'd be risking 400 possible loss. You see how it's helping you with your risk management plan. It's calculating for you in your account currency how much you're risking. So I can say, okay, if I want to risk 500 per trade, I can go a little bigger because I'm only risking 400 with this pending order, how it's set up. So then I put maybe 2.25 lots. I see it's 450. I go 2.5 lots. And there it is, exactly 500 possible loss in terms of exposure to my stop loss. Now, you could have overnight interest fee that could slowly add up if you hold the trade for days and weeks. So there's a little bit more that you could lose gradually if we start talking about interest. But in terms of the major exposure here, the main exposure to your stop loss price, it's calculating it for you here, okay? Now, we see my possible profit, 1,250. If that's what I like with the setup, then I'm all set. And I could have put AvaProtect, by the way, which I could protect for a defined period of time for a small premium cost, and all the profits are mine. And if it goes the wrong way, any losses during the protected time period are covered by the protection. So that's another unique tool you can use with our WebTrader and AvaTrade Go app. So now what if we look at this from another perspective? We've got the pending order ready to sell if it gives a better price. But what if you believe this is going to go up right now? If that's your belief, because you see that the volatility index is actually down today. Fear has dropped a bit, although it's still high volatility. It's above 30 on that VIX index, which typically is viewed as high fear environment. But today it's given back some ground and the volatility index has actually dropped. Some of the instruments have been bouncing, cryptocurrencies included, have gone up some today. So now I'm looking at the 1-day candles. And you see, that's why the take profit prices were in this range. Because look, on the 1-day candles, there's a support level here. When it hit this price back here on the 1-day candles, it went up. And it has not broken below that price for some time. Right now, it's sitting right on that support level. So in the short term, it's possible this could bounce up, even if it's eventually going to break this support and drop further. Okay? So there are a couple things you could do here. Yeah, actually more than a couple, but I'll give you a couple ideas. You could have a pending order to sell if it breaks this support level. Meaning if it breaks below where it is now, it confirms a further downtrend by breaking the 1-day candle support level. You could have a pending order to sell from a lower price. So we have a pending order to sell from a higher price if it goes up to the resistance above. But also you can have a pending order to sell from a lower price if it breaks the current 1-day candle support. So somewhere below this wick, if it goes to a lower point, you could have a pending order to sell and have your stop loss then just back above the 1-day candle support. So a pending sell order down here could make sense as well. And currently, since it's bouncing up off the support, you could do a market buy with your stop loss just below this support level. Okay, so let's zoom back in then on the small candles, 30-minute, let's say, and you can say, okay, if it breaks below this wick, right, then I'm selling. So I could put a pending order to sell from down here. Okay, and you can find that price with one of these lines we drew and say if it drops below 111.81, so say 111, if I put this line in place, if it drops below 111, say 75, maybe you say, I'm convinced it broke that 1-day candle support. I want it to sell if it drops below 111.75. And then you can have your stop loss back up where the price is now. Okay, you could program a pending order to do that. You also could say, okay, the opposite, if this continues to climb, if it shows an uptrend on the small candles, meaning if this, trying to drag my line here, whoops. Here, let me delete that line. Let me get a new line. I put it so low, I'm having trouble grabbing it. There we are. So a pending order that if it breaks to a new low below this wick, At some point, if you're convinced that it broke the support level, you can have a pending order down here now at like 111.75, something like that, to sell. I'm not saying you should. That's another idea to be able to go with the current momentum if it reconfirms itself by breaking the one-day candle support. The opposite also. Not only could you have that pending order down here ready to sell if it breaks to that low point, you also could put a pending order to buy if it goes back above, say, this support level here. Support, support, and then it broke down, and then it tested it and didn't break back above and came down. So if this goes up and breaks above a certain price level that you deem important on the small candles, you could say if this comes up and hits this price up here, 111.95, then I buy. Or if it breaks above 112, maybe that round number makes sense to you. If this breaks back above 112, maybe you assume that that establishes an upward, even if temporary, momentum, okay? So you can kind of surround this with pending orders to say if this breaks above 112, I'm buying with a take profit just before this resistance. And if it breaks below today's low, below the one-day candle support, then I'm selling, okay? So those are a couple ideas to be able to surround this movement that would guarantee an entry. Doesn't guarantee profit, it guarantees an entry because eventually it's either going to break the one-day candle support or it's going to break above 112. One of those is guaranteed to happen eventually here. So a pending order up here at 112.05 maybe, and a pending order down here at 111.75 to sell if it drops down here, to buy if it comes up here. Basically, that strategy surrounds the current movement and waits for confirmation of either a breakthrough up to establish upward momentum before you buy, and waiting for a breakthrough down to establish downward momentum before you would sell. It looks like it's trying to break the one-day candle support right now. So you almost could do a market move if we sit here another 5 minutes, which we won't, but you get the idea here with the strategy, and you can use that type of breakout strategy with any instrument. It's what's important here is this price level is a one-day candle support that we saw on the one-day candle. So this is an important price level that if it breaks below, it could plunge. Many times when one-day candle supports get broken, it's followed by a lot of momentum, okay? So not always, but many times. So you see the value of not just buying because it was right above the one-day candle support. It's still dropping. So if it's above a support level that you like, many times you can avoid buying on something that continues to drop by saying, okay, I respect the support level maybe, but I'll only buy if it goes into an uptrend on the small candles. That's why a pending order above 112 makes sense maybe before you would buy from just above this one-day candle support. And as we see, it's not confirming an uptrend yet. So we wouldn't have entered into a buy expecting a bounce off of this support level because it hasn't started to bounce yet. We're waiting for a bounce if you put a pending order right above 112 before you would buy. Type OK if you're with me on that type of breakout strategy from an important price level like this one-day candle support. Okay, I won't take the time to actually place those trades because I want to move on to the requested FTSE to look at. And just there, it broke this support. You see it? So if we had our sell position ready to go, it would have triggered the sell, and you'd be in on a sell position now. And programming the stop loss back above that broken support would be something that could make sense. And we would have avoided buying and being in a big hole right now. So many times you look at the bigger fundamental picture and you say, I could have predicted maybe that support level was going to break. Why? Well, because the fundamental news overall has high fear. Remember I said the VIX index is above 30, it shows high fear. So in general, I might be more comfortable selling from the resistance level rather than buying from the support level, because this is what can happen when the fundamental news says USD should strengthen. Look what happened. So this is really nice to see in live action that the pending order price that we suggested down here below that support level, you'd already be 10 pips in profit even further from that 1175 suggested pending order price. And you could have scalped the profit already. Or if you're more patient, you're waiting, okay? 10 pips could pay well though. It's already dropped to a 10 pip profit already on that potential move. All right, so let's then get off of this chart and go to the FTSE. And we'll close with the FTSE. Whoops. FTSE, there's the FTSE 100. Okay, and so what do we see on the 1 minute candles? We see a little bit of resistance starting up here. If we go to the 1 hour candles, we see why the 1 minute candles had resistance there. This is a perfect looking support resistance level. Okay, so this was old support in the 1 hour candle, support, support. Then once it broke through, classic became resistance and down, resistance and down. You see that so often. It's not 100%, but you see the support and resistance theory coming through many, many times. Old support, once broken, becomes new resistance, and right on cue here, resistance and down, and now today, resistance and down. So this looks like a spot where if you understand why the market pulled back up, fear kind of leveled off a little bit. We saw that it was down 3%, the volatility fear index. But in the bigger picture, we see it's still above 30 on that VIX fear index, which is considered very high. Then you say, I expect this resistance to hold maybe then based on those fundamentals, right? No guarantee, but based on the fundamental view, maybe you respect the resistance more than you respect the support level fundamentally. So then you might say, okay, I'm going to sell on this then with a market move. And I'll take profit if it comes near today's low down here or yesterday's low. So let me draw a new line. And I say, okay, I'm not going to be greedy. If it even reaches the low that it was at just several hours back, maybe you're happy with that. So take profit, you might say 72.67 as an example. You obviously can put the price you want if you like this move. Stop loss, if we're right with this simulation, if this resistance level holds because the fundamental news is on our side, then it shouldn't break above that resistance level. If it does, then we're wrong, right? And when you're wrong, then you have to decide, well, how long do I want to let it go if it's proving me wrong? And there are different theories on that. I'll just give an example of saying if it breaks the resistance, I'll get out quick. I'll take a small risk with a much larger potential profit. If it breaks the resistance, then hey, we're wrong. The momentum wasn't on our side right now. And you can take the quick, small loss. The other idea is you could have your stop loss above another resistance level and be more patient, be willing to risk a little bit further, to wait to see if it goes your way. And that's fine also. It's more than one way to go after it. So in this example, we'll put a stop loss here. So 74.94. Sometimes it's good to get above round numbers. So if we go above 7,500, let's say 75.05. As long as it doesn't break above 75, we would still be in on this. So stop loss 75.05. And again, this is a simulation, guys. I'm not saying you have to take these trades, but it's showing you a strategy based on the technical price levels that are here, the support resistance level, and the fundamental news as we're trying to interpret it, which hopefully increases our percent chance of being correct. And that's the best we can do as traders, right? And so we see the potential profit is much better than the risk, much larger. Now, if I know going into it, I'm willing to risk X amount. As an example, I'll say 500. Then now I adjust my trade size. So the possible loss is what I'm looking for. So half a lot, I'm risking almost 500. Let's go 0.6. That's a little more than 500. So 0.55. And I'm right at about 500 possible loss to my stop loss. The exposure to my stop loss price is around 500. Okay, so if it were to close at the stop loss price, this is the amount that I would lose. It's doing my risk management, a lot of it for me here. And so now I see my possible profit and away I go. Okay. So now we've done a market move. And you might ask, well, what's the difference here? Why on this one did you do a market move in the simulation? And on the other one, you did a pending order. And the answer is easy. The pending order that we did here, this pending order on the Euro USD, the reason we did a pending order is maybe we didn't like where the price was right now. We agreed that it could keep dropping, right? But we said, wow, unless it breaks the support level and it would have hit our pending order that we're talking about, which we could have set up, we're saying, all right, well, if it's bouncing back up, we'll wait for a better price to sell. Okay. And obviously, had we set up the pending order, taken the time to do it that I was suggesting you could as a breakthrough strategy, look how far in profit you'd be now. Okay. Very easily, we could have set up the entry at 111.75, which is what I had said, would be part of a breakthrough strategy. And now you'd be about 15, 14 pips in profit. Okay. It's easy to try and make these predictions. You're not always going to be right. But it's easy to go after these predictions when you understand the fundamental news. So in one instance, we would only enter if it moved to a price that confirmed what we were thinking. In the other instance, with the FTSE, it's at the price we wanted. If we believe that it's supposed to drop, this is the price we want. It's right below the support level. It's right below the old broken support, which is our resistance level. So that's the price we wanted. So in that case, if it's at a price you want, then you do the market move. Okay, so that's the difference here. And both of these setups, we're limiting the risk in a way that makes sense for our account, for our personal goals and preferences. Any questions before we end things? Okay, someone's asking, he left though. Olawale was asking a question, but he has left. We'll save that for another time. The question was, sometimes gold rises with fear, sometimes it drops with fear. What's the difference? Why does fear sometimes make gold go up, and why does this fear sometimes make gold go down? Not to get too deep into it because we're about to end the webinar, but in general, gold tends to rise when there's inflation fears. And gold tends to drop when there's fears that will strengthen the US dollar, right? Right now, the fears are that interest rates will be increased. So that type of fear tends to strengthen the currency and pull down commodities like gold. Whereas if the fear was inflation will continue to get worse, that type of fear, a fear of a weakening currency, tends to cause gold to go up. So there are different types of fear, and depending on what's causing the fear, that drives the direction that gold would move or the strength of the US dollar would move. Olawale, do you understand that answer? I'm glad you're still here. Okay, I'll assume you understood the answer. I know it takes a while to type sometimes and get your comments to come back through. But in general, you have to look at what's driving the fear and understand, is in terms of gold, is it fear of more increased inflation? If it is, then gold tends to rise. Or is it fear that they're taking measures to stop inflation, which is what's going on now? Then that tends to strengthen the currency and pull gold down. Okay, all right, thank you everybody for joining. We'll be back at it next Tuesday for my next webinar, Tuesday evening, 6 p.m. UK time. All right, everybody, good luck with your trading today and the rest of the week. Bye for now.